Hi, welcome to the Lighthouse Podcast. I'm Alex Camargo, alongside my business partner and good friend, Denny Silva. We work hard to bring you great value and content to this podcast. Anything related to real estate or anything going on in the community, we got you covered here. Today, we'd like to bring out a very special guest, a good friend of ours, and a partner in this business, Mr. Drumroll, Jose-Vladimir with Guaranteed Rate Affinity. Jose, thank you so much for being here.
Thank you for having me, Alex. A pleasure to be here.
Awesome. So tell us what you do.
First, I want to thank you. Danny, thank you for having me here. It's a pleasure to be partner with you and helping you reach the community and help you in your business. I am a mortgage loan officer with Guaranteed Rate Affinity. I have been in the business for over 18 years. And
But you look 35. When did you start?
that's great. I love that. Yeah, I used to have hair, then I got into mortgages, and then things changed. No, but it's a great career, very rewarding, very challenging. And what I do is to help people buy homes if they can, finance a property, and achieve the American dream, which I think everybody wants to achieve, to have something that is there, something of their own.
It's like the American dream is slipping people's hand right now.
It is, unfortunately. It wanes and goes with the economy. And right now it feels like the rug is being pulled from under all of us. But in reality, we just adjust to the economy. We adjust to the situation, and we keep moving forward, right? That's the only thing we can do. But yes, I've been in business as an originator for over 18 years. I started my career in Delaware. That's where I'm originally from. And then I relocated to Connecticut about 7 years ago, and I've been here ever since.
That's awesome. I'd like to take a couple of minutes of this podcast. You're an Army vet. We'd like to thank you for your services.
Thank you, Jose.
Thank you very much. To be honest, I didn't do anything special. I showed up, and it was a transformative time of my life when I was in the service. It changed my life completely. Because I can tell you honestly, I was a high school dropout, and the Army is funny. When I was in basic training, they forced me to get my GED because I was a high school dropout.
Yeah,
right.
Yeah, discipline.
Yep.
Right.
And they forced me to get otherwise I wouldn't graduate from basic training. So they said, we're going to continue to recycle you until you get your GED. And I was like, there's no way.
I'm not doing this boot camp anymore.
Basic training all over again. There's no way, right? And so it really forced me to get my GED, and then it opened my eyes to the value of education. And years later, here I am, and I graduated from Temple University with a double major in finance and real estate, and that's what led me to this path, to this career.
That's awesome. That's great to hear.
Yeah, thank you.
And I think that's what makes this country great. We show up, right? You showed up. You didn't even know what was in front of you, ahead of you, but you showed up, right? You made a conscious effort to get out of where you were and do something different because you thought you would benefit from it. You showed up.
That is correct.
Isn't what they say, like that's 90% there? You just gotta show up. Show up, right?
Show up.
As soon as you said that came to my mind. It's like, I showed up. I was like, that's all you had to do.
Yeah, literally, I showed up. I wish I could tell you that I did something fantastic. No, I started my career in the military. I did it for 6 years. I started first as a generator mechanic. And God bless the recruiter, because when I went to the service, I was 19. So when I went to the service, I was 19, and I didn't know what I wanted to do, to be honest. Again, I was a high school dropout. I didn't have any idea of what career I was going to do, right, with my life. And this recruiter said to me, well, what do you want to do? And at that point in time, you're going to laugh, but considering the things that are happening right now in the world, you'll find this funny. I mean, the United States and Russia, they were not in very good terms, right? Still, and so I said this to the recruiter, I want to kill commies.
Yeah.
Right? And he started laughing. He said to me, son, he says, you need to think about what you want to do with your life. I mean, granted, how are you going to feed a family? How are you going to maintain, so you qualify to do a type of training. You can be a generator mechanic, or you can be air conditioner and refrigeration in the Army as well. So or you can be a soldier, what they would call a ground pounder. Yeah. I said, you can do that if you want. I said, but how are you going to feed your family? How are you going to provide for them in the future, right? And so he encouraged me to go that route of being a mechanic. And it actually, again, it changed my life. It gave me the guidance that I needed
The discipline.
And when I came out from the service, from basic training and doing my specialized training, it really changed my perspective in many things. And from there, things just changed. So anyways, really,
That's awesome to hear.
it was a blessing to me.
Yeah, that's
So,
awesome to hear.
Thank you.
Yeah, that's great that you got that background, because I believe discipline is something that comes at hand when to deal with what you have to do these days, with the amount of paperwork that you have to work with, and being organized with everything. You know, if there's no discipline in that, then you kind of get lost, right? Yeah, we're living in an era where like the banks want to know like the color of your towel to give you a loan, how much they will go into your life, and like how much stuff that you need to request from potential buyers, and I think everything that like your past, what you've done, plays a big role in what you're doing now. If life prepares you for things that you're gonna do. Like me, for example, I used to sell cars. I worked in a restaurant business for a long time. So working with the public and getting hit with the car salesman rap, which we all know that it's not the greatest, right? Yeah. Really prepared me to do what I have to do now. Like I work with the public now, and as you know, we encounter all types of people, and problems and families. So I think the discipline that you learn in the Army and your past plays a role in what you do these days. And talking about that, what you do, Jose. So when it comes, I just made a video regarding regarding the process of purchasing a home. I'm actually doing a series of videos of what the steps to take to purchase a home. Okay. And one of the things that I mentioned on that video was, you know, if you're going to go to a supermarket for groceries, if you're going to go to a gas station for gas or buy a car, anything that relates to making a purchase, first thing that you need to understand is that you can afford that, right? And that's the same thing with I only make those examples because we do get these calls of people like, can I go look at this house? Have you been pre-approved? Are you working with someone that like can you buy this? Because it's time, right? Like I don't want to waste my time. You don't want to waste your time, and not only that, but it's also guiding that person in the right direction. So, what I was saying in our first video is like, let's look at affordability. Let's look at like, can I purchase this? What am I qualified for? How much am I qualified for? So you fall right in there. You are that first step. And I mean, correct me if I'm wrong, the two of you here, probably the most important step. That's where the
nothing moves if that doesn't move.
That's
right?
where the moolah comes from,
That's
right?
I love the analogy that you used of going shopping for a car or going shopping for food. Let's stick with the one with the food because I like that idea. What they said, don't go hungry. Don't go shopping when you're hungry, or if you don't have a shopping list, because then you end up buying more than what you really require.
Both of my experiences at Costco every time.
So I think that's actually a pretty. Let's go with that analogy because I like it. It works very well for what I'm about to say. And it is that, in fact, yes, you have to be prepared or go prepare when you're thinking about buying a home. It's not just an idea of you. Of course, you get the idea, you get the dream, right? It gets in your mind, and you see a friend of yours who bought a property or anything like that, and you get the dream that you want to buy a home. But then you have to start really thinking it and planning on how you're going to achieve that. And there's certain steps that you should do. You should know how much money you're making. You should know how much debt you currently have. You should know how much money you have available to help you start with your home buying process. I'll give you a personal story. That's the reason I like this analogy. I tried to buy my first house when I was 20. I tried to buy my first when I was 20. And I went to a real estate office, and the realtor who helped me then, at that time we didn't have any of this technology. In fact, you could see properties going through a book, right? There was no, right? And he said to me, well, son, have you have you been, no, he didn't pre-approve. No, he says, have you been approved? And I said, no. He says, okay, let me pull your credit. The realtor pulled my credit, not an officer. So he pulled my credit. He looked at my credit. He says, thank you for stopping by, but you're not ready. We can help you. And I went to that same real estate place 3 times, and 3 times they treated me exactly the same thing. The point is, he never once told me, you're not ready because your credit is shot, which it was.
Right.
He says, you have no money saved, which I didn't. Right? He says, and even though you have a decent job, at that point I did, it was decent, it wasn't bad, but he says, you're not financially able to buy a home. So instead of guiding me, he was just, okay, thanks for coming, get out. Thanks for coming, get out, right?
Yeah.
So the point I'm trying to make is that, yes, to start this process, if you have the dream of wanting to buy a home, the best way to start is, 1, get educated by meeting folks like yourselves, Danny and Alex, by talking to someone that will genuinely want to guide you and help you. Talk to someone like me, and who will tell you, okay, you want to buy a house? The shopping list that you need is be employed for at least 2 years. 2, make sure that your credit is decent. If you know that your credit, there's some questions with your credit, start working on those questions. Start working, repairing those things. And have some money saved. You don't have to have a lot of money. It is a myth that you need to have 20% down payment to buy a house. That's not the truth at all. But it's a good idea to have some money in the bank because there are some expenses that need to be paid during the process of buying a home.
And not only that, there's some expenses that you're going to incur after you buy the house.
That is correct.
Because if you're buying in an entry-level price range, then the house that you're getting, especially now with prices being so high, the house that you're getting is going to need work. There's no ifs and buts around that.
True.
You're going to
True.
need work. So buying a house and having a few $1,000s in a savings account for the rainy day. What if the furnace breaks in the middle of the winter?
Right.
And you have a family,
Absolutely.
you're going to be scrambling for one of the things I appreciate most about you is you don't want to just sell a mortgage. You're fully concerned about educating the client along the way, which really, makes me want to partner with you and bring you more clients because you care. It's just not coming by, take a loan and get a mortgage from me. Is how can I better prepare this person to succeed? Which is what we try to do on our end, right? We're trying to educate clients and people, and even if they're not our clients, by having this podcast, by putting a lot of content on social media, is let's push out this knowledge. Even if you don't buy from me or don't buy from Jose,
Absolutely.
you'll learn something from us. Where if your mortgage agent or real estate agent on the other end is giving you wrong or false information, you learn something from us that you can challenge them. And
Absolutely.
it's okay to challenge them.
Absolutely.
Right, so I really admire and appreciate the extra effort.
But I think, and you and I think alike, I think it's just a way of, we can always be takers. We have to be givers, right, as well. And it's a way to push it forward, pay it forward.
Absolutely.
And it's a sad state of affairs with our, and I don't want to get to that topic, but our educational system, even in high school, we're not teaching kids how to even balance a checkbook. I mean, even how to manage money, right?
Yeah.
So we have families, persons who want to get into owning their own home, but they have no idea what to do.
Such a far way to go.
Exactly.
Yeah, and that's the future, like balance the checkbook and know how to manage money management and what to invest in.
Exactly.
But there's a bunch of history classes that you learn about the past, right?
Absolutely.
Yeah.
I mean, and not even how to manage, your credit card. I mean, they forget that credit cards is actually is a loan. A credit card is not just cash that you carry on this plastic thing. It's a loan that you carry with a very high interest rate. And so, unfortunately, yes, our first-home buyers are not fully educated. I do believe, and that's one of the things that there are certain programs that require buyers to take first-home buyer courses. And I think those courses are fantastic. And I encourage buyers, even if they're not taking advantage of a first-home buyer program, to take those courses because they're provided for free by the federal government, right? And so take those courses and learn about the process, educate yourself, so that way you better prepare. So again, when you go shopping for that, you have your list and you've done everything you need.
So let's talk about the process.
Sure.
And I don't think we've ever asked a mortgage agent to speak about the back end of the work that they have in any of the podcasts that we've done. So a random person will call us, or family member or a friend will call us and say, hey, I want to buy a house. And then one of the first things that we tell them, hey, you have to get pre-qualified unless you're buying it cash. And I speak with people in that way. Are you buying it cash or are you financing it? Because you never know who has enough money out there, right? So are you buying it cash or are you financing it? And they'll say, oh, I'm going to finance it. Okay, no problem. We have to speak with a mortgage agent and get pre-qualified. They're going to ask you a few questions. They're going to ask questions about work and all of that, which I no longer care to pre-qualify a client. It's not my job. It's your job. And I would prefer not to waste my time and the client's time asking 20 minutes worth of questions when there's nothing that I can do with that information. So, all right, let's set up a meeting. Here are 3-4 mortgage agents, and then you can go ahead and call them. Of course, I end up recommending you often because of the clientele that we serve. They speak Portuguese or Spanish, and you also speak Spanish. So that helps establish trust with that client. And a lot of the clients who have English as their second language would prefer service in their first language. So you come in handy when it comes to that. But you pre-qualified the client, and then we take the client out. We show some homes. We get a house under contract. We go through the process of inspections, and then at that point, we're done with inspections. I have a file ready to send to you and send it to the attorney. So that file arrives in your email. What happens from then?
Good question about the process. And I think this will give you a good idea of why lenders prefer to have between 30 to 45 days processing of a mortgage, because it's actually a very time-consuming and due diligence focused process. So just like you said, after a loan officer pre-approves a borrower, we give you a pre-approval letter. Hopefully that loan officer has collected documents as well, and the loan officer has done what is considered a pre-underwriting. Essentially, yes, I'm a sales loan officer, but I'm also in a way an underwriter, a very low-level underwriting. I don't make the final decision, but I'm supposed to know guidelines and understand guidelines, so I know where to place the customer. So once that has happened and you provide me with a contract, then immediately what happens is I will trigger the transaction. I will make it into a full application, which means the 1003, which is the loan application, will be fully completed. Any gaps will be taken care of because we have to provide an initial application. And then once the application is provided, then it goes into my processing team. And my processing team at that time, they will order the verification of employment. They will also, my disclosure department will also issue the loan estimate, which has to be signed together with the application. And while that's happening, right, we are collecting additional documents from the applicant. And this time we will actually be verifying the information. So if they provided tax returns, we are going to verify that those tax returns are actually valid. So we will contact the IRS and make sure that the information that we see on paper is what the government has on their database. We will call the employer to verify employment. We will verify assets. So the bank statements that we see, we're going to verify that, in fact, that they have assets. So we do all this processing during the 30 to 45 days closing time period. In addition, we will also order the appraisal, and the appraisal is done by an independent appraisal management company. The mortgage company cannot be involved directly, the loan officer cannot be involved directly because there cannot be any type of collusion. So it is done by an independent company, and they will schedule the appraisal. Usually an appraisal will take anywhere from a week to 2 weeks. Right now, about 2 weeks is taking time. There were times that were taking 3 weeks, actually, when we were very busy. So it all depends how busy that appraisal management company is. So once those steps have taken care of, the processing department will submit the file. So it will be, sometimes if we're lucky, we'll get the appraisal, the 1003, all the supporting documents. We may even have a verification of employment, and they'll provide all that information to the underwriter. Underwriter, for us in our world, they are God. So what they say goes, right? So
They're the devil in ours.
Yeah.
yeah, I love it. I love it. That's great. No, but
I had to
they're-
throw that in there.
No,
I'm
you're
sorry,
right.
I'm
You're
sorry.
right.
To
No.
all the underwriters out there, we love you guys.
Well, we haven't met
No.
any of them, so it's fine.
No, but the truth of the matter is, it's funny because as a salesperson, I always say, I look for the opportunity. Underwriters see the risk,
Yeah.
and that's the fine line. We see opportunity. I meet a customer and I think, oh yeah, they qualify. I see the opportunity. In my opinion, they'll be able to get it. But the underwriter, when they start
Red
reviewing
tape.
the file, they start looking, they start peeling that onion and digging, and they look for the risk. And that's really is their job, to look for the risk. Is this transaction really, is this borrower will be able to actually pay for this mortgage? They are who they say they are. They're in fact buying the property for themselves, or they're not acting as a straw buyer for somebody else. So there's a lot of things that they go into, a lot of investigation that go on the underwriting side. So yes, they're God to us because their final decision is what matters. But they can be very devilish.
You have to worship them.
Yeah, you have to work on that, but they have to be very devilish because a lot of times they can actually destroy a transaction if they're very rigid on how they read and how they interpret the guidelines. So it's challenging for loan officers.
And just to go a step further, so the guidelines are usually Fannie Mae, Freddie Mac's guidelines, which
Correct.
is the biggest buyers of mortgages out there. So
Correct.
What a lot of people don't know is the day you close on your loan, most likely the very next day, it may be sold to a different bank.
That is correct.
So that's why the underwriters will have to stick to those guidelines because they want to make sure that your loan is sellable in the future, correct?
That is correct. And on top of that, so Fannie Mae and Freddie Mac, those are government-sponsored enterprises. They're supposed to be individual companies, but the government has a lot of input on what they do because they buy, I would have to say probably maybe 98% of the mortgages?
Yeah.
Maybe I'm too high, maybe 95% of the mortgages. But every mortgage that is done in the United States, it will eventually be purchased by Fannie Mae or Freddie Mac or Ginnie Mae. Those are the government agencies. And basically they provide to mortgage companies the basic guidelines. They set a foundation. This is the foundation for us to buy this mortgage. You have to follow these rules. But on top of that, mortgage companies also set their own rules, and those are the layers of guidelines. So mortgage companies would set additional layers, and this time they're doing that to protect their own interests, their own investment, right? So the underwriter's job is to meet not only Fannie Mae or Freddie Mac guidelines, the baseline, but also to meet the additional layers of requirements that the individual lender may have added to that process. So going back to how everything works, once the underwriter reviews, they receive the 1003 of the application, they receive the supporting documents. Hopefully they already will receive the verification of employment, verification of assets, those things that have been started at the beginning of the transaction. And sometimes if we're lucky, if we got the appraisal already, the underwriter may even have the appraisal as well. So they'll be able to fully review the file and provide a decision on the file.
Yeah.
And that's when we get what is considered a credit approval or a commitment to lend. And usually the commitment to lend will come with some additional conditions. It's hardly ever that you get one that is completely clear. Which means, basically what that means that you have a commitment to lend is that the lender says, okay, Mr. Borrower, we have reviewed your information, but we still need additional things in order for us to give you a clear to close. And those things can be anything. It can be, okay, we need an updated pay stub, or we saw that there's some deposits in your bank account that we need to document where that money is coming from.
Need to be explained.
Exactly.
Right.
Or for example, let's say the loan officer made a mistake and didn't see that on the pay stubs there's a deduction for child support, and it was not on the application, right? So then the underwriter catches that, and the underwriter will request for additional information that has to be explained, right? So that's essentially what happens. So once we get that commitment from the underwriter, then it becomes up to the loan officer and his team to continue to work the file, get answer those questions the underwriter has, and once those questions are answered, whatever they may be, we will get our clear to close. And once we get our clear to close, then we can start thinking about scheduling the closing. And also while this is happening, we order the title from the attorney. We would send an initial, what is called the initial closing disclosure, which gives the idea, which sends numbers to the attorney for them to get a base of what we're doing. And then the attorney will put together and they'll put the final numbers into it. They'll polish the numbers. They will assist us in polishing the numbers. And then once we're ready to close, then we can schedule the closing and close, and everybody's happy. But believe it or not, this process, and even though it's a lot of people try to push this to make it faster, 20 days closing,
21 days closing.
21 days closing. I've heard people try to close 15 days closing. That's extremely aggressive, considering the amount of due diligence that a mortgage company has to do in order to be able to sell a mortgage to Fannie Mae and Freddie Mac and to any other investor.
Yeah.
But I hope, did that answer your question?
Of course.
Yeah, when we brought up our offers, we learned with some probably tough experiences that we never write up an offer that's less than 40 days to 45 days to close.
Yeah.
You know,
I think it's very smart.
Yeah, and
it's
hey,
smart.
if it closes in 30, that's cherry on top.
Yeah,
you know, like we always prepare our clients. Two things actually, because we hear this so much. It's like, I cannot take giving another piece of paper work to the bank. I cannot. Like they want everything, that like people get really stressed over. But if you prepare them for that prior, that's why, like, sometimes, you know, Alex mentioned this once to me, and I thought it was brilliant, that even though you're the first point of contact when someone is looking to purchase a home, if they come to us and we're able to set their expectations and be like, listen, this could, like, and we've talked to all of your clients, we let them know that this could be very stressful, overwhelming. You know, it's not like, hey, you know,
it's not a walk in the park.
Yeah, it's not a walk in the park. And like that initial, like, you asked them for let's just say pay stubs and the last years of taxes and a couple other things, and you were able to give them a pre-qualification letter. But there's so much more after that.
There's
so
much more.
And if you can prepare, it's the same thing with, like, and if that hits them without them expecting it, now that, like, it's like kids, you know, if I just go at night and I turn the TV off, my daughter will flip out. But if I tell her, like, 5 minutes before, hey, in 5 minutes, you know, you have 5 minutes. Okay, no problem. It's the same thing. It's the same thing. It's the same thing.
Very true.
And you're like, hey, listen, if you know, this could be very stressful. The bank will ask you for everything, and a couple of things on top of that. We can look at 3 houses and you can find a home, or we can look at 40 houses and the 40th will be your home. Once they have that in mind, and now, like, okay, and even though it gets hard, but at least they were prepared for that.
I think that's very smart, and is the right approach, in my opinion.
Yeah.
So, tell us, with your crystal ball, about the future. Let's talk about interest rates. As
Where are
of
the interest rates going to be in a year from now?
As of the recording of
Magic Cable?
at the recording of this podcast,
Right.
which is the end of March of 2022, interest rates are about what?
4.25%, 4.375.
Okay.
Creeping up.
Keep it up.
What do you think it'll be, according to, of course, you can't fully predict this, but according to the inside information that you have, according to the track record of where we've been and where we're going, what do you think we're going to be
Good
6
question.
months to a year
That's
from
a
now?
good question. That's a very fair question. A little disclaimer, I don't have an inside track. I wish I did. Otherwise, I'll be investing and making money like crazy. All I can do, and all we can do, is look. You know what they say in investing? The past is, basically you're supposed to look at the past for past performance to predict a little bit of the future. And that's pretty much what I look as a person who's in the business, and also trying to prepare customers on what to do in this very volatile environment that we're in, is to look at the past. So where are rates going to go? Rates are going to go up. This is undeniable. Considering that we had interest rates a year ago that we were at 3.875.
Yeah.
You know, some of them were 3.25, depending. And some people actually were almost at 2.5, 2.75 interest rate. Right?
Yeah.
Incredible interest rates, right? So interest rates definitely are going to go up. What's affecting interest rates? Well, look around. The cost of everything has increased. Everything. My son just booked a flight from Philadelphia to Boston. Last year, that flight cost $150. Right now, he paid $375. Yeah. So everything is going high. Everything is higher. You can see it when you go shopping. So there's no way for us to not realize that interest rates are going to follow suit. So how high can they go? If history is an indication of how high they can go, when I arrived to this country back in 1984, that's when I came to this country, interest rates were at 14.5%. So 14.5% back in 1984. What was happening then, right? So back then in 84.
I was born in 84.
You said 94 or 84?
84.
84?
84. So in 1984, when I came here, I was just 14. So the math, right? I was just 14.
All right, I'm not going to say how old Jose is, but I'm 37. So
yeah, I'm an old dude. But so in 1984, again, they were at 14%, right? And so what was happening at that point in time? All right, so what did we have? We had a lot of high unemployment, right? Which we have right now, even though this is government created. We have high unemployment.
Unemployment?
Unemployment.
Is it unemployment right now, or people don't want to work?
Well, in this case, it's people don't want to work because the government is incentivizing them.
Yeah.
But put that aside. Let's look at those
Yeah,
things that are
true.
creating, right? Or the things that are moving the market, right? So we have people who are now working. Let's not call it unemployment because it depends on what number you're looking at. I think the unemployment right now is I think 6%. So, but people are now working because they have been incentivized not to work. So we have a lot of people who are now working. So we have that. Next, we have high prices, fuel high prices. In the 80s, fuel was very expensive. Now we're going back to that as well. So fuel is very expensive, and as we know, fuel impacts everything that we do, not just vehicles. So anything that you want plastic, it
impacts this water being delivered.
Everything, water being delivered, it impacts everything. The crops that farmers have to grow, they use fuel to make those things happen, right? So it impacts everything. So it's a trickle-down effect. And on top of that, so now we have also, I don't want to say war, but we have conflicts, right? Conflicts around the world. Yeah. So in the 80s, there were conflicts around the world. And now we have a conflict here in Europe with Ukraine and Russia making these moves. China's making these moves. So we have, but in the 80s, we have conflicts as well.
Right.
We still have the Cold War, right?
Yeah.
And so when I look at those things, and everything tells me that, yes, we will continue to go up. And according to some of the literature that I read and experts, they believe that by the end of this year, we will be around 5.5% to probably 6% interest rate.
And when you look at that, and you can probably run some numbers quickly, but let's say if I take a $400,000 loan out,
right,
at a 4.25%, which is what we have today, compared to, let's say, a 5.25% in a year from now, how much more am I paying?
Yeah, you probably have good for that question, but you'll be paying an additional. So for a 400, I did the calculation. For a 400 loan at a 4.25%, you're looking at a principal and interest payment of $1,968. And if that rate goes up to 5.25%, it goes up by 1%, then you'll be paying $2,209. Wow. That's a $241 increase
every month for 30 years.
For 30 years. So the moral
that's
of this,
a lot of money.
That's a lot of money. So
about $80,000, $90,000.
Yeah. So the moral of the story, in my opinion, and this is the advice that I give my customers, those who I pre-approve right now, they are in a very peculiar situation because houses are very limited. You know that very well. Inventory is very low. Prices are very high. And now affordability is going down. So I tell my customers that if they qualify to buy a home, if they can afford the mortgage payment, if they can afford to live comfortably, or if they're not sacrificing too much, so they're going to be at risk of losing their home, buy a home right now, because rates are not going to be this low, in my opinion, unless something major changes. Yeah. But I think nothing but.
But the opposite, the other pressuring factor of that is if you choose not to buy a home right now, it's going to be more expensive in a year from now. So is your rent.
Absolutely. Everything goes up.
Yeah.
Everything goes up.
Imagine those people that have been waiting for real estate to go down. Apparently, that's not what's going to happen because they didn't want to buy. And now, with the rates going up, they must be like, wow. Like,
Yep.
what? And there's a
Scratching
bunch
their
of them.
heads.
Yeah, scratching their heads. There's a
Absolutely.
lot of people we spoke to, like, no, things are going to get better.
Yep.
Things, and then, like, missed out on that 2.8 rate.
The
No,
biggest
same.
heartbreak right there.
Yeah.
On that 3.1, on
Yeah,
that
I
3
agree.
point,
Yeah.
3.25, even a 3.5.
Oh
you
my
know,
God, yes, it's yeah.
I
absolutely.
bought a home in 2012 at 3 3.75,
Very nice.
and I was like, wow, like I've never seen this happen before. To see going in the twos this year, that was like, I was like, if somebody's not buying a house right now because they're waiting for we had to do the math to a lot of people, be like, okay, hey, this, and at that point the houses weren't like crazy yet. So a house that was like $300,000 prior to COVID was now $350,000,
Mm-hmm.
and they didn't want to do it because it was $50,000 more. But prior to COVID, rates were in the fives, right? And I was like, all right, so you'd rather like wait but like do the math. Like if you're paying like 2.5 points less than what it used to be over 30 years is
Ton of money.
it's a ton of money. It doesn't make sense that you're not buying right now, but it's just, you can bring the horse to the water, but you can't
force
make
it
him
to
drink. Yeah.
Absolutely, and it's fascinating the dichotomy of how all those things really work and the psychology behind it and how people view, how people see, and it's all about how they see risk and how they see the cost benefit, right?
Yeah.
You would take a buyer out
Yeah.
5-6 years ago and they would look at 30 homes because they had 30 homes to look at.
Right.
And they wouldn't put a single offer. You take a buyer out today, they're putting an offer on whatever they see.
Absolutely right.
Yeah.
You are so right. You are so right. The moral of the story, in my opinion, and again, I'm not really a guru or an expert on this, but based on what I see of how the economic trend, how things are going, I think interest rates have no choice but to go up.
Yeah.
The federal government, something also to keep in mind, when the pandemic started, the federal government was buying mortgage-backed securities. So they pretty much had the thumb on the scale, and that's why interest rates were low. So now as they're pulling back on buying those mortgages, interest rates will continue to go up. So exactly. So they will continue to go up. Again, I stand by my statement. I believe that if you're a buyer who's been pre-approved and you're able to qualify right now to buy a home, jump on it. Jump on it because I do believe there are, and this may be a good topic for us to talk some other time, but there are some financial benefits to buying a home that at least for now we can take advantage of.
Right.
And one of them, in this case, when we go to an inflationary market like what we have right now, everything's expensive, real estate is the best hedge against inflation. And for a renter who has the capacity to buy, that's the best way to protect themselves from the cost of housing going up.
20 years from now.
Because rentals will continue to go up, while at least mortgage payment will hopefully will stay. Technically, it's supposed to stay a little steady.
Yeah.
Right? Because
Yeah.
it's a 30-year fixed mortgage.
Yeah.
Mhm.
Right? So it is a hedge against inflation in that sense.
Right.
That's a good point.
And obviously the other benefits that we get as a consumer when we buy a home.
Tax breaks.
A forced savings.
Yeah.
Most people do not save any money. They have no money for retirement. But if they're able to buy a home and make their payments on time, then at the end, now you know very well how high the properties have gone up. In the end, in 30 years from now, their home is going to be worth more, and they'll have at least a nest egg for them to be able to hopefully retire and have some money to help them, right? So a forced savings. And of course, you have the tax benefits that for now we can take advantage of unless the government changes anything on the tax code. And obviously, yes, again, it is a hedge against inflation. And I think this is the time to do it.
Those are good points. Thank you so much for being here with us. I like to wrap this with a pledge to the sellers out there. So you're a mortgage agent. and you do loans, and you do every type of loan. You do residential loans, right?
Yes,
You do the
correct.
commercial loans, you do residential loans, you do your conventionals, your FHAs. You also do VA loans, which is loans for veterans.
Correct.
Being one yourself, having served this country, what we're going through right now is if we have a VA loan, it's almost impossible for that offer to be accepted because of the extra difficulties of a VA loan, which in some cases are real, in most cases are just imaginary
They're imaginary.
difficulties.
For the most part, they're imaginary.
So I like to end this with a pledge to sellers out there. When you're looking at offers, 5, 10, 15, 20, 50 offers, which we've seen cases of 50 offers on the table, you have to be able to balance out the additional difficulty of a VA loan, which a lot of the time is imaginary, with who's behind that offer. Because here we have a person like you who served this country and family man and fully committed to not only serving your family, but also serving your community in many different ways, right? For the sellers out there, we can ignore that. The person behind that offer has served this country. If anybody's putting together their funds to buy a house, and you have a veteran here also scraping up whatever little money, because you don't get paid well at the military, and if you served for a few years, whatever 4 to 6 year tour, you're coming back home. You don't have a lot of money, and you're scraping up all your dollars to put together towards buying a home. Which, if you serve this country, you should be entitled to a home, right? Because you're out there. So let's make that pledge to the sellers out there. Like, consider these offers. Consider the people behind these offers.
I think that's such a wonderful point to make. It is always heartbreaking whenever I do a pre-approval for a veteran, and then they go shopping for a home, and they make an offer on the property, and they get denied, and it makes no sense to me. You work with me, so you know that I've always encouraged even not just the buyer's realtor, but the seller's realtor to always contact me, call me. If you have questions about a transaction, call me so I can tell you and educate you of what transaction, how I'm doing, and what is it that I'm doing for this customer. But VA loans is just a fantastic loan program. Money is money. The problem that a lot of sellers have is when they see an offer, a contract come in, and it has a 0 down payment, or maybe a very little earnest deposit, and they believe, this offer is not strong enough. That's nonsensical. It makes no sense whatsoever, because at the end, when the transaction is done, their seller is going to walk away with the amount of money they wanted for their property.
Absolutely.
So they're not giving anything. Yes, there's some things with VA where most veterans will ask the seller to pay for all of the closing costs, because with a VA loan, essentially it's a 0 down payment or basically 100% finance lending program. And yes, the seller has the option, it's not mandatory, to pay for the closing costs, so there's truly no out-of-pocket to the veteran. Personally, just like you said, if I were to have an offer coming in for a veteran who's qualified, I would be more than happy to help them get my home. Not only because they serve our country, I don't know, they earn it,
Absolutely.
and do anything possible to help them. But even so, even if the seller they're asked to provide closing assistance, then very simple. There are techniques to deal with that, right? And right now in this market, increase the property value. So you cover that cost, and the seller gets what they always wanted to get anyways. So it's very disappointing, and thank you for making that announcement, because it's so true. If a veteran has been properly vetted by a loan officer, someone like myself or any other reputable mortgage company, please, please, please accept their offer, because it's money.
Yeah, absolutely.
Yeah, it's money.
Thank you, Jose. Thank you so much for coming here. We had a pleasure to hear a little bit about you, your story, and the great advice that you've been giving to us, to the audience that is watching this. Do you have anything else for Jose? No?
Thank you.
Yeah. So that's a wrap. Don't forget to like, subscribe, and share this with someone that you think that may take advantage of this. We'll see you guys next time with some great content, as always.
Thank you for having me. Sincerely appreciate it. Thank you.
Thank you, Jose.